Since 2022, you've probably heard quite a bit about central bank digital currency, or CBDCs. China has already launched their own, the United States has already launched a pilot program, and Japan is set to launch their own version in July of 2024. Well, so far the U.S. government has only been focusing on wholesale CBDCs that are used exclusively in interbank settlements, but the general consensus seems to be that the ultimate goal is to replace cash with a digital currency for the entire economy. In contrast with cryptocurrencies, which are decentralized, transparent, and tamper-proof, digital currencies are centralized, traceable, and directly issued by a country's central bank. So the question becomes, what are the pros and cons? Should such an approach become firmly entrenched in the United States, and should you be worried about it? Okay, let's start with the potential positives of a digital currency. For starters, a digital currency would be considered legal tender. Given that the central bank can never default on its obligations, this means that it would make bank runs a thing of the past and arguably make the banking system more robust than it's ever been. Granted, banks would have to do a lot of adapting in this new scenario where the central bank essentially controls all the deposits. Banks would have to evolve and adopt new business models or be phased out. Now, if you're concerned that a digital currency might impinge upon your freedom, some experts argue that the current system already impinges upon your freedom. After all, in the current setup, your banking transactions and activity are already digitized, automatically monitored, and constantly screened. Accounts can be flagged and frozen by the government with a surprising amount of ease. And if that's the case, should you really be worried if these same types of things might happen with a digital currency? Before we get into the potential negatives of a central bank directed digital currency, let's contrast the dumber digital money sitting in your current bank account with the smarter digital money that would be issued by the Fed under the new scenario. Currently, dumb digital money cannot be programmed to do anything that physical money cannot. But that is no longer the case with the newfangled, smarter digital assets. For example, let's say that a recession is looming and the Fed decides to wire $1,000 to every American's bank account. Because they control those assets, they could stipulate that you would need to spend that money within, say, 3 months, or else that money expires and gets zapped out of your bank account. Or perhaps the Fed issues welfare payments that can only be spent on specific things or at specific places. There are limitless applications of this smarter money, but also limitless reasons to fear it. A clear downside of a CBDC, according to the Cato Institute, is that it could allow policymakers to also set negative interest rates. In effect, a negative interest rate would result in people losing money. Proponents argue that this strategy could be implemented to spur spending. Another negative: the programming capabilities of a CBDC could mean that people would be prohibited from buying certain goods or limited in how much they might purchase. For example, policymakers could try to curb drinking by limiting nightly alcohol purchases. Furthermore, CBDC can allow government agencies and private sector players to program targeted policy functions. By programming a CBDC, money can be precisely targeted for what people can own and what people can do. A CBDC could also undermine both the foundation and future of financial markets by reducing credit availability and disintermediating banks. And lastly, a CBDC would be precisely the tool the federal government would use to fight the rise of cryptocurrency. In short, there's reason to believe that all of the negative factors you're currently experiencing with the dumb digital currency would be exacerbated with a smart digital currency. It would make it a lot easier for the federal government to overreach in places where it probably should not. What's worse, it's not so much that the introduction of a digital currency is a threat, it's that they would simultaneously be eliminating any alternatives, which eliminates any choice you have in the matter. In summary, a central bank directed digital currency is likely to replace cash and would give politicians a lot more power and control than they currently have. As a result, the government's control over your life is likely to grow exponentially in the coming years. So, should you be worried about a central bank directed digital currency? Only to the extent that you're worried about the federal government intruding in your personal life. If you would like some help implementing a balanced, comprehensive approach to tax-free retirement planning that shields you from longevity risk and tax rate risk, head on over to davemcknight.com and click on the Connect with an Advisor button. I'm happy to refer you to an advisor in the PowerZero network that has been trained, vetted, and qualified personally by me. If you're a financial professional and want to learn how to become a certified PowerZero advisor, head over to powerzero.com and opt into my free video series. And And if you have any comments or questions, feel free to drop them into the comment section below. I respond to every single one of them personally, and don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.